Other than Nvidia, other than TSMC, ASML is the best gauge that we have for the artificial spending boom on the market today. The company just released earnings a day that everybody's looking forward to. They absolutely smashed it out of the park, up something like 7% in the pre-market, yet look at this ugly candle. Down pretty much straight from the open, almost closing at the lows. So what is going on here? Should you be worried? And what's the probable explanation and implications on companies like TSMC, Nvidia, and your other hyperscalers, Meta, Microsoft, Google? Let's talk about it. First, very briefly, we're not going to talk about EUV technology because that gets really complex really quickly, but just know that ASML makes the machines that allow Taiwan Semiconductor, TSM, to make Nvidia chips, and they're a virtual monopoly on the space. Nobody else makes the machines that they do, and so the whole supply chain really does hinge on this company, and we'll talk about that more in a second. But the high level bird's eye takeaway is that the company's bookings in the fourth quarter absolutely destroyed estimates. It almost doubled what Wall Street, the analysts, were expecting to hear. When you hear a company virtually doubled what people thought they were going to get and still went down on the news, something else has to be behind it, right? After all, nowadays, like we just saw with TSMC, we're really just looking for growth year over year to tell us, hey, the AI spending is real and it's not some sort of bubble that's all of a sudden going to pop, which could be true sooner than later. We don't know that, but the point is the numbers are telling us everything's looking good right now. ASML comes out with game-breaking earnings. Bookings just means these $350 to $400 million machines haven't all been actually made yet, so companies are putting in their pre-orders to get these things shipped to their facilities, namely TSM, so they can start using them and making more Nvidia chips, because that's what everybody wants, right? As we just mentioned, TSM absolutely destroyed earnings on robust AI chip demand. What'd you expect? And similarly, we just had really good news with Nvidia that China has approved the purchase of 400,000 H200 chips. Now, yeah, the H200 isn't Blackwell. It's definitely not the next generation Vera Rubin, but we know at this point the United States wants to protect national security. They want to protect their edge in the AI chip market, and hence they're telling Nvidia and Jensen Huang, hey, sorry, you're out of luck. You're not going to be able to sell every chip you want there, but we'll let you sell some of the older ones. And that's actually really good for the United States too, because Trump made sure that they're going to get a piece of the pie. The US government's going to take 25% of the cut of Nvidia H200 sales, and given that there's 400,000 of them selling at a pretty hefty cost, that's going to be something like 10 to 20 billion dollars in additional revenue for Nvidia. Obviously that profit's going to get cut a little bit, that margin's going to get cut because the United States is taking some of that money. But I think you can begin to see why people look at ASML as a gauge for AI spending. If companies need Nvidia chips, then they need TSM to make those Nvidia chips, and the company that allows TSM to do their job is ASML with their advanced EUV and DUV technology. And another reason we have to pay attention to this is because AI spending on data center infrastructure, you know, the hundreds of billions of dollars that big tech is throwing at Nvidia, AMD, Broadcom, that growth in spending makes up a greater portion of GDP growth than your dollar, your spending does. So obviously we have to pay attention to this, especially if you invest in the market. As we know, a lot of the market's just heavily weighted by AI companies at this point. This chart just gets the point across that GDP growth is very, very reliant on AI spending. And if we want to continue seeing GDP growth, which is good for businesses because if GDP is growing, businesses get more confident, they hire more people, they pay more money. The second they see that deteriorate, they start doing the opposite, firing people, making you sad, making you have less dollars in your pocket to do things you want to do. You get the point. And let's be honest, if you haven't been living under a rock, then you probably know there's some people, a lot of people that are skeptical about, you know, OpenAI's commitment to like $1.4 trillion in spending for a company that makes 20 billion. So this really puts the AI bubble at the forefront of just about everything, with Sam Altman really being the linchpin of it. When somebody asks you a simple question about how you intend to do something or what your strategy is to approach the AI spend that you are pledging to make, even though you don't make that much money, you wouldn't expect the answer to sound something like,
And you've heard the criticism,
First of
Sam.
all,
we're doing well more revenue than that. Second of
Yeah.
all, Brad, if you want to sell your shares, I'll find you a buyer. I just enough. Like, people are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would want to sell
Including
them, but I think
myself.
I mean, this definitely does exactly the opposite of what Sam Altman intends to do on podcasts. Really, you want to go out there, market your product, make people feel good, feel safe that what they're investing in is continuing to grow and justify this massive spending. But instead, you kind of just shit on the guy and tell him to sell his shares because, somebody else is going to pick up the tab. Why does it come to that? Why can't it just be a simple answer revolving around your strategy? This creates worry, and this puts into the question the whole point of this video is what we just saw with ASML in their earnings, with TSM, with Nvidia coming up. Are those things justifying that the bubble or the spending can continue? Shortly following this, Sam Altman came out and issued a code red as Google Gemini was absolutely taking over the scene. Usage is now very similar between the two. Some are arguing that Gemini is a lot better. Others say ChatGPT is better for some use cases. It doesn't really matter what you think. The point is, Sam Altman and OpenAI are getting a little bit worried. And let's be honest, if your competition, Google, Gemini, had $150 billion of cash flow ready to deploy on building out AI infrastructure and getting ahead of you, who has very, very negative cash flow, losing $40 billion a year at this point, making 20 billion, I would be worried too. And a code red definitely makes sense. This is a massive company that you're going against. You're stepping into the ring with an absolute giant. So again, this is just one of the problems that umbrellas or overarches the whole situation and makes everybody constantly criticize and be skeptical, and rightfully so, of 1.4 trillion in spending. That is absolutely absurd. Google over the last 12 months pulled in roughly $230 billion in profit. So keep that in mind when we talk about the scale of 1.4 trillion in spending. It's unfathomable at this point. And yes, ChatGPT is one of the fastest growing companies of all time, but still, we got to factor in just how enormous that number is. The good news about this, and again, to address the question posed in this video, has ASML in their most recent earnings, in their earnings call, have they eased the pressure that's been put onto this space? Doesn't matter if it's Gemini or ChatGPT winning. Take that out of the equation for a second. I know it's hard to separate it because it's kind of become so integrated into the whole problem. ASML hit us with some really, really good news. I sense some concern that we may be the bottleneck for the customer, and we heard reassurance from management that this is not the case, certainly not this year, and again for next year. Somebody has to be the bottleneck, right? We don't live in a perfect world with a perfectly integrated supply chain where everybody's on time. We've already seen delays with CoreWeave's build out, Nvidia's best friend in hyperscaler, in cloud compute. But somebody between the AI chips and Nvidia, the manufacturer of the chips, TSMC, and getting all the raw materials and components that are needed to put on those chips, and the most basic and fundamental, I shouldn't say basic because it's one of the most complex machines to ever exist on this planet, but the most foundational level technology that there is, the machine that allows you to make the chips in the first place. This machine literally allows you to cut with precisions 1/10,000th or 1/100,000th the width of a human hair. You can barely see the width of a human hair. So just think about how absurd this really is. At the end of the day, they're not the bottleneck, and that's really good for AI spending. That means your foundational layer is certainly in a good spot, at least according to management and how the money flow looks right now. TSMC is absolutely thriving, and Nvidia, we'll find out in February, but it's certainly looking good with China markets now getting access to some of these older technologies. If they're able to continue selling older chips that are supposed to depreciate to zero over time, remember, these are depreciating assets. This technology, as newer versions come out, for example, the iPod Touch, nobody has that anymore because the iPhone 17 does everything the iPod Touch does and more. The capability's gotten better. The battery's gotten better. Everything about the hardware's just gotten better. That's the same thing that's happening with Nvidia's technology. Yes, Blackwell is much more capable than the H200. But the point is, for this AI build out, you need everything you can get. And that's what these Chinese companies are clearly doing. And not only is all of that true, but there's a lot of other players in this game, right? It's not just Nvidia, TSM, and ASML. Obviously, they make up like the primary, secondary, and tertiary pillars of AI chip manufacturing and design, but we need end users, obviously. If you don't have anybody to sell the product to, then there's no reason to buy $350 million machines to make them. And what better way to rely on Zuck to tell us what the future might look like for AI spending when Meta just released earnings and absolutely smashed, by the way. We're not going to talk about that. But the important part that we're looking for is their CapEx guide. In other words, how much money are they going to spend on AI infrastructure? We're expecting $110 billion, and they came out and told us that spending is going to be somewhere between 115 and 135 billion. Growth is absolutely out of this world. You can see just from the top 5 hyperscalers alone, this graph isn't just growing, it's exponentiating, right? This is not a linear growth curve. This thing is straight up. And where do you think those revenues are going? Probably to your Nvidia, to your TSM, and eventually to your ASML. So I feel like we just went through a lot of good news and some general concern that we've had for months now, that OpenAI is a bubble and is pretty much asking for government bailouts at this point because their spending commitments are so insane. But there's a lot of good. So why is ASML down? Revenue beat. They raised guidance above what people expected. They announced a share buyback program through 2028, which shows confidence that, hey, we're going to make enough money to support our operations. Let's give some of this value back in the form of shareholder equity. Let's buy back some of this stock, decreasing the supply, increasing the price of the stock. Sales growth has been consistent for 13 years now. And I'd argue one of the best signs of it all is that China is still ASML's biggest customer. Now, why is that a good thing? Well, ASML makes a lot of different machines. Remember, like chips, ASML's machines depreciate with time. At the end of the day, technology gets more capable year over year. And so somebody has to step into the market and buy the older machines because you don't want to get stuck with a $200 million machine just on your shelves and inventory, right? It's a little more consequential than a Peloton bike that's $500 sitting on the shelf and not being bought by a consumer. And this shows China, again, is curbed by US regulation, stepping in saying, hey, you're not getting access to the best machines. We are, TSM is first, but you can have the older machines. So again, like we saw with Nvidia chips, China is soaking up the supply of these less capable technologies and frankly doing a lot of good stuff with it. We see models like DeepSeek competing with the best models in the United States, even with much less capable technology. If there's any dagger with the ASML earnings, it's probably this. ASML won't report bookings in future quarterly results because the company argues it doesn't accurately reflect their growth. Now that might confuse you because obviously future quarterly results and projections are exactly how you gauge a company's growth and gauge the AI bubble. But to be fair, with a company that sells $250 to $400 million machines, sales don't exactly come on a very consistent basis. It's more in lumps and big orders when a company thinks they really need to scale out. So they argue that, hey, we'll do it on an annual basis still, but that's kind of scary to the market because they don't have that foresight that they normally would in the past with quarterly projection. So at the end of the day, I don't think this changes anything fundamental about the AI investment craze. If anything, the CapEx is showing us that it's set to absolutely blow up, and we're probably going to see that in Nvidia earnings coming up in a few weeks. This move by ASML is probably just profit taking because it's up, 40% in a month? Kind of makes sense. People want to take some money off the table, and maybe just a little scary because of those projections going away, which really is all we're working off with AI investments. Like we talked about with OpenAI, they're making $20 billion a year, $1.4 trillion in spending commitments. You definitely need to project like 10 years into the future to validate anybody investing in that company. That's it for the fundamentals. I just want to say this quick. I've been working on this software that helps people test out their strategies, see what strategies are performing best, and view what signals are triggering on the market today through purely quantitative analysis. Now, obviously, it's important to mix fundamental analysis, understanding the technology, and the quantitative data. What is it telling us? What are the big investors doing? And so if you want to stay up to date with a nice, easy to understand user interface that tells you, hey, these are the sectors that are looking really bullish right now. These are the sectors that aren't. What are the benchmarks, like the SPY and Qs, telling us what impact does that have on companies like Nvidia, like MCore, like Netflix, that are all triggering some really confident signals right now, meaning based on the data, we can expect some good returns going forward. If that sounds any sort of interesting to you, I encourage you to click the link in the description, www.marketspredictor.com. It's completely free and hopefully provides you some value. If it sucks, let me know. If it helps you in any way, that's enough for me to be happy. ASML just gave us a really good gauge on the future of AI spending and the implications on other stocks like Nvidia, like TSM, and your mega caps, Google, Amazon, Microsoft, and Meta, who also crushed earnings. That's it for me. Let me know what you think about ASML. Now the biggest company in Europe by market cap, almost 500 billion. I'll see you in the next one. Bye-bye now. Bye-bye.